you have this wealth management side, which a lot of CPA firms, I don't understand why a lot of CPA firms don't go to the wealth management side, because it's a very high profit margin and it fits like all your CPA clients, like, we're trying to sell them bookkeeping and stuff, which tend to be lower margin. Like the wealth management is very high margin and way easier to sell. So like, what would you say to a firm that's thinking about adding wealth management? Like, how do they go about doing it? What's a good way? And like, is it worth it?
Hello and welcome. We are all the sons of CPAs. Join us as we question the current state of the accounting and tax industry with the next generation of professionals leading this space. We are the change agents in an industry fraught with money and inertia. Let's begin the Sons of CPAs with your hosts today, Jason Ackerman and Scott Scareno, with a very special guest, Sam McCraw, CPA.
Thanks for having me. Appreciate it.
Welcome, Sam.
Thanks.
So you worked for Scott.
I did twice, actually.
So give us a Scott story that we don't know about.
Oh God, you can't put
the most embarrassing. Literally the most embarrassing.
Yeah, probably do the most embarrassing. The one that I would probably be most embarrassed with. You should start with that.
Oh man, dude, that's going to be our Atlanta stories when like your hotel room's like a in fact like second bar that everyone goes to, but your hotel is always a party spot. Like everybody, because whenever the party is going on in Atlanta, it's always in Scott's place. He kind of just sets up a second bar for all the
Xero
wild things.
No, this actually wasn't even XeroCon. This is the Paget Con. Like we don't call it Con.
Yeah. This is our yearly annual CPE update.
Yeah, so it's like the tax con. So I talked about this during Kenji's little podcast thing. It was like the tax conference for Paget. I don't really consider a conference, but then again, I turn it into one, and it gets fun sometimes. I have a lot of fun during those.
Yeah.
I'm not that embarrassed by that one, but it's a decent.
That was crappy. What about a time like you was blackout drunk? Like I want one of those.
Like what?
I want one when you realize.
Yeah.
The only time you've ever gotten crazy, I wasn't even there. That was like the Christmas party, like the year that I started before. And yeah.
That's an embarrassing one. I blacked out during one of our Christmas parties. Sam wasn't even there. Yeah. That was before Sam started. That was an interesting one. Yeah.
He cleaned his act up after I started there.
That's good to know. That's good to know. I don't drink as much though. I drank during Kenji's. It's called Drink While You Think. So speaking of, like I had a 16-ounce, 10.5 out volume out beer, and I was drunk by the end of that episode. Like I hadn't drank that much in a while. Yeah. This came up actually during one of our team meetings, and like is your dad? He's pretty much retired, right? That's interesting to me. Yeah, that's dope.
Yeah, we owned a couple of restaurants. He was a partner in his restaurant partnership whenever I was a kid growing up, and then he ended up selling his share to the existing partners. Then became general manager just of an Olive Garden in Greensboro for about 10 years. But then he started a director role with Darden, where he'd go around and essentially failing restaurants or restaurants that are just opening. He would go in there and essentially kind of like to profit almost, figure out where the inefficiencies were. And he's always been entrepreneurial and, had that business spirit. And he was kind of a legend, honestly, in Darden for, the amount of revenue he's had and always, broken revenue and revenue his space or square footage ever. So, I mean, he was really a game changer in that industry and worked really hard and just knew the space really well and was able to have a lot of success and was able to retire when he was 48 years old. But did it by pretty much maxing out profit sharing, bought as much Darden stock as he could, putting, money at risk in the equity markets, yields good returns, and was never afraid to do that, and saved aggressively and paid off debt, was able to retire when he was, a pretty young man.
Well, and what reason I wanted to bring that up is because you are very, very savvy when it comes to business, stock, money. And I feel like the constant for you is your dad. You've worked a lot of different places, but where do you learn most of your intuition and how you are has got to be from your parents. So it kind of brings everything 360 and because it kind of leads to, you started out and you joined the Army, right? Like we're 20 years from September 11th right now.
Yeah, so I was actually in the Air Force, but I served in security forces. That's our version of military police, and I was stationed at Seymour Johnson Air Force Base in Goldsboro, North Carolina. I'd also served 8-month tour in Bagram Air Base in Afghanistan, where I did counterinsurgency and area security operations. So basically, we were on a QRF, or quick reaction force, that had a 20-mile radius around Bagram Air Base, and we would just patrol that daily. We go into villages, talk to elders, essentially coined a stance for counterinsurgency. And basically that mission is just basically hearts and minds. We would go through the villages and try and give aid where it was needed, engage the elders, essentially just trying to make an economic or kind of resource motivation for them not to participate or collude with the Taliban, rather to come on our side and attack us a little less. It wasn't very successful, obviously, but that was the mission that we were doing over there.
What's something that you took from your time in Afghanistan that you can take with your CPA firm?
I mean, it's just we kind of all over the place. So really, attention to detail, it's mental stamina. I mean, being a CPA is not being a military police officer, but I mean, we are subjected to a whole lot of work and tight deadlines and a lot of attention to detail to our clients' needs, not just with the numbers we put in a form. So it's kind of able to withstand that kind of workload, being able to have attention to detail and put the right things in the forms, or just making sure that we're evaluating the right strategies for our clients. There's such different worlds, but that's about the only thing I can kind of pull out of it that still applies, in the CPA profession versus the military.
Do they need CPAs there, like on the ground, like the people that you were helping? Does any of them really need people like us?
People there are worried about surviving past 40, 50 years old, and Afghanistan is still a third world country. I mean, they're not worried about accountants. They have a tax regime that doesn't even cover most of the citizens. And now it's, Islamic law again. So it's not a lot of parallels, there's no need for financial professionals in Afghanistan. The United States, Internal Revenue Code is one of the most complex bodies of law, and, it's ever been created. And our tax regime is incredibly complicated to, administer, and it's all voluntary. So, I mean, I think the United States has a very unique landscape and unique need for CPAs, where a lot of other nations, their regimes are not that hard to administer. And, they don't need quite the professional, guidance that a lot of people need here in the United States, which, is great for us. It does also lend itself to, a lot of loopholes, and there's a lot of ways to take, advantage of fog and just a gray area of the law. And I think it's been exploited pretty professionally here in the United States.
The chaos is a ladder, right? Like they say that in Game of Thrones, the chaos is a ladder, and the ones who really seize that opportunity, like, those are the really successful ones, because we have a chaotic system. Not necessarily chaotic, but like you said, the fog, and there's like, if you don't understand what's going on in that chaos, then it is fog. But I think it's still chaos too. When you look at it, the way that we do a lot of these laws, like the way that we change the tax code and everything, that's
well, so when you came back or you left the Air Force, why'd you go into accounting?
That's an interesting question too. I guess probably a lot of it was coming out of the military and being in that environment where things are always changing. It's very unpredictable. You don't know where you're going to be. I think I wanted to switch into something that was a little more stable. But I still I really wanted to travel. I wanted the freedom to be able to, do a lot of things. And the accounting profession just seemed kind of not a guarantee, but it was safe, it paid well. I was good at it. Took some managerial classes, or just some basic finance or accounting classes in college, and excelled at it. And tax for me was really just kind of I was more and more a tax guy than an accounting guy, but obviously I went into accounting. But tax is a good intersection of accounting, law, and economics for me, and I was always really interested in it. I was interested in doing tax research and really kind of reading the code and getting an understanding from a technical perspective how this stuff was administered and how it works, and just something I was drawn to. So double major in accounting and finance at UNCG whenever I got out, and never looked back.
Well, then you also went to UNC Chapel Hill to do more, right? Like we haven't got into that, but that's
So I graduated from UNCG in 2015. Took a job at a public tech company in Raleigh called Bandwidth, or listed on the NASDAQ. But it was just a financial reporting job there. So I was there for a little bit over a year. They got my CPA. Still had some GI Bill money left over from the military, so I decided to go ahead and just do my master's as well. Applied to UNC Chapel Hill, applied to Villanova, got into Nova's master's tax program, got into UNC's MAC program, ended up going to Chapel Hill and graduated there in June 2019 to MAC and taxation.
That's around the time Sam was working for me too. I know a lot of that.
So how'd you find Storano's firm?
So Scarano found me. He well, no, actually I applied on Indeed, I think, right? So did I
Yeah.
apply on Indeed?
Mhm.
Yes. Yeah.
Mhm.
I applied on Indeed. Scott gave me a call, and honestly, just to be completely honest about it, thought it was a recruiting firm at first. Whenever he called me, like I kind of forgot to even apply to it, but I started had a conversation with him, and we really didn't. I mean, it seemed like an attractive firm. I mean, they were doing things, differently. They were using Xero. They were a lot more tech focused, a lot more, automation focused than a lot of the CPA firms I've been, working on. I was working at a time at a firm that was so print W-2s on paper, not very e-file heavy, believed in being manual just for billable hours sake. So really was trying to get out of that environment, and this seemed like kind of a good lead in to have a switch in public accounting. So I decided to take a chance and move to Durham. I was going to grad school anyway out in that area. So that's kind of how everything started.
So Sam knows this, but it's the same story for me. Like when I started working at my firm, I had no clue what Paget Business Services did. I was like, is this a recruiting firm? Like, what the hell is this? And I even went in for an interview and had no idea. Like even after the interview.
Seems like you prepared very well for your interview.
Who, me? Yeah,
Yeah,
neither
you.
of us did, obviously. Like he didn't either, but it went well enough, So, but going back to a lot of these were all choices. We're sons of CPAs. Like I feel like I had no choice in the matter. I was going to do accounting anyway, and I was going to do this anyway because my grandfather did, my dad did. Ackerman's dad owns the firm that Ackerman's at, and he'll probably own it someday when his dad dies. We were born into this. You chose CPA as a practical profession, right? That seemed very practical for you to learn more about business too.
I think that was a big part of it as well. I mean, I think that's why I've stayed in public for so long, even though I've my career has been very non-linear, and I've weaved in and out of industry and financial reporting and tax like my entire career. I've worked a lot in tech, and really it's just been tech and public accounting is the main focus, but I've kind of weaved it in and out. But I mean, the reason why I've stayed in public is just having exposure to multiple clients, multiple businesses. There's dynamic work in a financial reporting environment. That bandwidth I was responsible for, I think it was 9 accounts on the GL, and they're all fixed asset accounts. So it's just the same thing over and over and over again. And although you're providing value management, you're providing timely information, it's just not really the same effect as sitting down with a client, going through a complex situation, especially in my current job now, wealth management, where we're doing special needs trust, we're doing estate planning, we're doing estate administration, we're doing business advising. I mean, there's a lot of services that are actually physically, or not physically, but tangibly helping people. And that's just why I think I've been in public accounting most of my time, or why I've decided to do this profession, is to have that impact.
Yeah, but talk more about what you're doing now. Just so we get some context.
Yeah, so currently I'm the tax director and CFO of Timonier Family Office in Winston-Salem, and we're organized as a multifamily office. We serve about 150 different families, mainly in the medical space. So a lot of our clients come from Wake Forest Baptist Medical Center, some of the large regional medical practices that are in the area, and we do private wealth for those people. We do 401k administration for some of the practices, but my primary role is all the tax compliance and planning for all of our families. But I also have business entities as well. I got a few farms that I do. So we got retail, we got some breweries. So it's multidisciplinary. We got all different return types. So state and trust, S corp, C corp, partnership, 1040, 709, it's 990s. You got private foundation. So
what platform are you guys using for tax?
CCH Access.
That's what Ackerman uses too. That's what most everybody uses. But so are you guys offering more of like a subscription base? We're doing everything, or how are they billing for that kind of stuff too?
So the private wealth side is all AUM. So we have a staggered basis point schedule for just percentage fee on assets. So we do no commission products. We don't do life insurance or anything like that. We broker through a third party for that. But the main, I would say, revenue driver is going to be just our advisory fee, which is usually about 1% of assets under management. We have about 479 million, I think, under management right now. So for 1% advisory fee, it's a little bit more than that for 401ks. We are the TPA record keeper as well. So we have that fiduciary duty that we also bill for. But then for tax, it's all well, I wouldn't say all, but it's mainly just going to be flat fee because of your value-based pricing model, flat fee for tax returns.
So how do they market those types of services, like the tax arm? Were they always doing things differently? Like, because it sounds very progressive in everything that they're offering. How do they market for that?
Yeah, so we've had this role for I think about 8 years now. So there's two other accountants that this before I did, but essentially we're offered as a multidisciplinary family office. So we don't really silo, segregate, or separately market like anything. So clients will come in, and so we have some clients now that are getting pulled in directly from the accounting and tax sides. They're actually searching for those services first. But say mainly our driver, we pull in to be a private wealth client, someone that wants a financial plan, or ideally someone between $1 to $5 million in assets. They come in, they want a financial plan, they sit down with us, and then we have this multidisciplinary approach that we're also selling them, where you get your taxes done, you have your tax planning conducted in-house. We have an estate and trust tax attorney that's on payroll as well, so they can do an entire estate plan. All that's integrated in. So Nick, who's our principal advisor and owner of the firm, we actually purchased the firm in February from the prior owner. But like him and I do everything tag team. So if a client wants to come in and have an annual report for a wealth care meeting, I'm in there. If a client wants to come in there and have a business tax planning meeting on their equestrian business, Nick's in there as well. As we don't really see them being separate siloed services. We see a lot of value add by having us both in the room and seeing how any sort of movements in the wealth plan. Does it generate a taxable event? Does it trigger capital gain? Do we have to rebalance out of his portfolio? Do we harvest losses? So we really see these opportunities and strategies we be very, very integrated, and we attack them congruently. We don't try to do this as like a separate marketing or a separate
no, we did a lot of that stuff too. It sounds very appealing to a client to say they handle all of my stuff. Like clients love that, especially when they have complex situations and multiple businesses and multiple things going on. They don't want to have this guy doing this guy doing that, this guy doing payroll. Like, do you guys offer payroll services too?
Yep. So we just now actually brought on 2 new clients. They're going to be our first like full round bookkeeping, full payroll, CFO services as well. So we got some of those CAS models. We're going to do some KPI tracking, some budgeting, but also, individual and business tax planning as well. So we essentially offer is a quote, it's kind of like an a la carte service, and, they can, pick and choose what they want. There's no really good, better, best. It's just, they pick, what cadence, quarterly,
monthly pricing. I love that. Like, this is where I'm at right now. Not good, better, best, but here's everything that we can offer. Boom, you choose. And I love that. Give them a roadmap too. Like, okay, well, I don't want to do this now, but I will with you guys later, after this next year's tax return or something, right? Like, I'm sure you run into that.
Yeah. And I mean, and that's how we offer it. We start on, I usually try to push quarterly bookkeeping to people unless, they really think that they want it monthly. I don't really want to sell services and work to people that they're not necessarily going to get value out of, or is just going to bog me down as well, just to generate, maybe a little bit of a billable hour. It's like the CFO services and tax planning, like all that's billable hour based. So, but I don't want to sell that to someone unless they really need it, or if someone's a straight up startup business, I'm not going to offer them CFO services right off the bat, $180 an hour. They just don't really necessarily need it. If it shows them what they can grow into, it allows them to have the agency control over the services that they want to have, and it sets the expectations very, very clearly up front, exactly what the scope of the work's going to be. There's not really anything where there's a gray area where they're feeling like they're not getting delivery of a service, or I feel like I'm not overproducing for a client, giving them something, more than what they need. Like, there's a more effective use of their capital than, paying me for a service so they're not getting a ton of value out of.
Yeah. I mean, we've had guests on that have more or less CFO type firms, and then they backed into doing tax and bookkeeping because they needed to. And so a lot of them still do it hourly. I mean, I think the consensus these days is you're billing hourly for that and then doing everything else under the sun as a flat rate. The higher leverage, higher margin stuff, or it can be higher margin if you're billing hourly. If you're not, you can't bill that much monthly for something like that.
So. Exactly. Yeah. And that's why I keep that at a billable rate, because it protects our upside too. I could end up getting in and they may want a really, really granular budget and, want to plan on 100 something different accounts, whenever my last client only wanted to maybe plan on 50 accounts. And now all of a sudden I've got twice the amount of work and I've locked it into this fixed rate. And you're not really getting your full billable potential out of it whenever you're providing this very customized, very high level service.
Well, you learn that when we try to offer larger things for clients and they're not necessarily paying for it, then we can't dedicate our resources to that as effectively as if you are billing hourly. So the way this one's going to work is they gave us a script. We're going to read a script and then we're going to talk about our experiences. Let's go. More than 5,000 accounting and bookkeeping firms across the world of all sizes use Practice Ignition to send powerful online proposals, to get paid automatically and manage ongoing client engagements in one place.
With access to hundreds of ready-made templates with built-in digital signatures and engagement letters, you'll feel confident knowing you're delivering a clear scope of work.
Plus, by offering your clients easy upfront payment options, you'll be able to free up your cash flow that gets reconciled into your QuickBooks or Xero automatically.
So what'd you use before Practice Edition?
So we had a PDF that we would put together, and
you were so proud of that PDF too.
I was so proud of the PDF. The PDF actually was just a display of your 3 options, but it would take forever to put together. And it wasn't just that. We had 2 different payment systems. We had to keep up with AR and Xero. We weren't really using Xero to send all the proposals. Some proposals were in Xero. It was all over the place. What about you?
What a mess. We did everything on Word documents and sent it through EchoSign. And then we had to set up a bill. We were actually using FreshBooks to bill.
So I think for us, we've been on Practice Ignition for about 2 years, and I've referred to it in the past as the heart of our tech stack, more or less, because before somebody's a client, they're in something else. They're in HubSpot. And then after they're a client, it pushes from Practice Ignition to 2 different spokes. It goes to Xero, it goes to Carbon. Because Xero and Carbon don't talk to each other, this is perfect because it keeps things unified.
Yeah, and it just saves you a ton of time. It keeps everything standard. And if you need to do a new proposal for a new client, you just think of a client that is similar to, copy it, put in their stuff. It takes 2 minutes, send it out to them. Then you're getting an ACH credit card in 2 minutes. You're getting paid.
There's a ton of customization too. When you want to put together a proposal, you can do those 3 options like I was doing on my PDF. You can do that. You can create templates. You can have variable pricing. You can have fixed pricing. You can have hourly rates. Anything, the way that you price, you can do that in Practice Ignition.
Yeah, and I'll just tell you from our perspective, we used to have $400,000 of AR all the time. Now we have $20,000 of AR. It's just cut down on our AR. So clients they're pains in the asses. But now Practice Edition solves for most of that. So for a limited time only, Practice Edition is offering 25% off your first year. If you're ready for a single source of truth for your clients, head on over to Practice Edition and use the code to get started for free. I don't know what our code is.
We don't have a code.
We'll just assume it's Sons of CPAs.
Yeah. If the code is Sons of CPAs, type that in there. If not, just mention us, I guess.
Yeah.
So talk about Intuit too, a little bit, like the experience of working for somebody like Intuit. Talk about that a little bit.
Yeah. So, I mean, that was a pretty unique position in my career. So I was tax analyst 2 at the San Diego office for Intuit, working on the Pro Series, TurboTax Business, and Cert products. Essentially, what my job as a tax analyst was to research tax law. And really, we would do that just by essentially doing PDF compares almost. But we had 3 development teams, and each team is allotted a certain amount of products. So you have a certain amount of states, and within each state, you have all their products. So S Corp, C Corp, partnership, fiduciary, trust, everything but the individual products. So you're assigned these jurisdictions, and it was up to you to determine, okay, what's changed? What is the code that has to be written to affect those changes, and then do the quality analysis to make sure that everything was covered. So for example, if a state change your conformity date to the Internal Revenue Code and they change a depreciation provision, or how they treat bonus depreciation, I would have to go and look up the new form instructions, develop the calc, so tell a programmer what calc he's going to have to code in order to make that situation happen, and then also test it. So if we're going to be testing depreciation, we have to do everything from mid-quarter convention. If you put more than 40% of your tangible property in Q4, how does that change things? Does it calculate that properly? Does it flow through to the K1s properly? So it's really going into the minute detail of, okay, this is the tax law has changed. This is the requirement. Now stress test it, run it through every situation you can possibly think of as a tax preparer to stress test that calc and make sure that it works right 100% of the time. We're judged very heavily on the jurisdictions. They will actually shut us down. California has threatened to shut Intuit down several times for errors in software. So we call those tax accuracy errors, when there's actually an error where the tax being calculated on that client's return or on the customer's return of its TurboTax is incorrect, and it's incorrect enough. Agencies will shut down your MEF access. They won't allow you to file. So, I mean, it's high stakes, it's high pressure. It's very corporate bureaucratic and Intuit, you know, Fortune 500 companies, one of the largest tech companies in the world. That's especially coming from a small business background to working for a large industry, like they're just completely two different worlds. And it's definitely an adjustment as a, you know, public accountant. You're looking from a small kind of regional background.
Seems like that's a decent job. They offer decent pay. They had a good campus, but you didn't stay there. Like, I'm sure people are staying there, but I'm sure there is turnover. Sounds like, you know, something like that isn't as rewarding, because who are you answering to? Authorities and
Yeah, I mean, really, our customer is the agencies. I mean, that's the agencies derive the demand for us staff to file these tax returns. So if the agencies aren't happy, they don't feel like we're providing an accurate product where they can successfully administer their own tax regime, I mean, they're not happy with us. And we do control TurboTax. It's a multi-billion-dollar company, and a large number of individuals are filing there on a daily basis. So if there's an error or something wrong in a calc, those things can get out of hand very, very quickly, and it's a mess to clean up. And the agency wants their money. We have to make sure that the product's accurate and that it's accurate all the time, if possible.
And our clients pay us to deal with the agencies. Like, nobody really wants to deal with those agencies. There's not, you know, it's not very rewarding.
No, and I mean, it's
what was the worst state that you dealt with?
California all day.
Yeah. So I'm interested in this. So the process, because, like, you know, states will pass their laws like December 31st, and the tax return comes out January 20th or whatever. So, like, are those 3 weeks just insane between when that happens? I'm assuming like beginning of January was the worst before the tax law came out.
That's exactly right. So like our busy season really started from probably, I would say, like November 15th until MEF turn on date. The states release draft forms too. So you a lot of times whenever you're preparing stuff in a software, sometimes you can be working on a draft. It's not even a final form. So, you know, you think you're done coding something, but they'll move a line or they'll change a rate or something like that. So it's an iterative process. You don't really ever know like when you're going to be done, especially whenever your RME states have a lot of drafts. And so you're waiting for that final, you know, form to hit, and, you know, you're doing iterations all through that. It's really busy. And, you know, when something breaks, that's, you know, the worst thing in the world. Or we find out we have a tax accuracy error. We have one in Connecticut on a separate development team. Luckily, it wasn't ours. That was like a $35 million error. So Connecticut passed a entity level tax for partnerships and S corps. So they started charging tax on the entity level rather than passing it through, since they kind of treat it like a composite return. And the product zeroed out the tax for like, I think it was like 30,000 filers or something. And it was over a $35 million error. And so we were all there pretty much around the clock for almost like 2.5 days trying to fix that and help the team too with it. It's a unique position, unique job, and, you know, it has its own, you know, unique problems, even though it's not public accounting.
Yeah. Ackerman, if somebody had a $35 million error at your firm, would you fire them? Like, well, firing Intuit. So.
Yeah, I mean, I'm sure Intuit files trillions of dollars worth of tax. So, and it's hard. I mean, what I've never understood is, like, why does Intuit not like focus all their time on the one product? Like, they're having to service 3 products and code 3 products. That seems like that's a lot of resources.
Well, and part of it, and one of the reasons why they're able to do that, and they do have discussions about that, but the products are so different. They're like completely different service lines. And TurboTax Business borrows off of Pro Series code. So I was primarily assigned to the Pro Series team. That was a Pro Series business dev, but all of our code is used underlying into TurboTax Business. So we're already feeding into that service line. And with Cert's kind of like that premium product, kind of like the CCH Pro system, UltraTax offering. So, I mean, they're still getting revenue from those lines.
Yeah, exactly.
It's obviously not for a marginal benefit. They're still having all the separate development teams. They've talked about it because it is 3 different service lines. You know, TurboTax is such a huge industry. It dwarfs Pro Series and Cert's, you know, revenue, like, you know, by an absurd amount, but it's still enough that they're pursuing it and still having those products out there.
I mean, it completes their flywheel of, we're doing QuickBooks. What if we called it QuickBooks Tax? You know, at some point, they may not call it TurboTax Business. They may just call it QuickBooks Tax or something. I don't know. I don't know how that branding fits all of it, but, you know, a QuickBooks user to say.
Well, they call it Pro Series.
They have ProConnect now too. So yeah, ProConnect essentially is that mapping from QuickBooks to the tax return, but I've heard it's crap. I've never used it.
I mean, Ackerman's ready to start using it. He's ready to get off CCH to go on there.
Well, it's the one like full cloud based, but it still has a little bit of ways to go.
Yeah, well, I mean, at the end of the day, it's all mapping. So, I mean, if you're able to map all of your GL to the tax return, and you think it would all just push over, and you just reconcile the M1 to make sure it matches book income, and that you're actually getting the tax result that you're looking for. I've heard it's got a lot of problems, and it's just not very user friendly.
Well, Xero's always had problems with book to tax. The book to tax. There's another company now called Tally4 that we have as a guest at some point, but he left Xero to go develop a company just to do book to tax.
That's a huge, workload every year, especially new clients, just getting that book GL into the tax return, mapped over. And, I was a huge proponent of, counting CS and actually mapping it to the trial balance rather than doing like pivot table and manually entering in yourself. I mean, both systems work. I mean, you can go in there and just manually, peck and, key every single number in there. That's fine as long as you go to the M1 and reconcile it all out. But if you
still need a clean place for work papers, right? You need
Yeah.
a clean place to go back and reference all of those work papers. And if you're using a disjointed software stack, and you're trying to go cloud, but you're straddling the cloud and the desktop, it's difficult for a firm. I understand the need for it, but I also where do you draw the line in doing too much for these clients that aren't paying that much? But then again, if QuickBooks has that solution and it's palatable, a lot of people will probably use that. And I mean, when I say that Ackerman is on Intuit, I don't know, that probably means he's going to stop using Xero and he'll probably start using QuickBooks.
No, that's not what that means.
I don't know.
I
Eventually,
think you got to do both. I mean, it's just too much of a market for either one. But at this point, I mean, I know some people are just are not still doing Xero. A lot of people don't even know what Xero is, but I mean, I think that's their own demise. It's not that much more incrementally to learn Xero or QPO, but I mean, I'm at the point where now we don't do anything desktop. So I mean, I've moved over everyone from desktop to QPO. We're not taking on anyone that's not cloud-based accounting solution going forward. But
QuickBooks isn't that much different than Xero these days. I mean, you got to learn the different system and you got to understand. But you've used both, and you've worked for Intuit, and it's so seeing both sides of that, is one really better than the other? To be honest.
They're just different. I mean, as an accountant, I would much prefer QBO, and the only reason for that is I can just make friggin' journal entries to accounts receivable and payables and bank accounts if I need to. But sometimes you have to do a reconciliation entry, and Xero is not going to allow you to do that. If I want to change something in accounts receivable, I can post a journal entry rather than going and deleting a bunch of invoices and all that stuff, and maybe the right or wrong way according to another accountants.
How I feel.
QBO allows a lot more flexibility, in my opinion, than Xero does. But Xero has a lot more built-in internal control, so it's just which one do you really want, and which one do you prefer as a user?
And I think I grew up hearing that about QuickBooks before Xero was even around, and because my parents have a software company for nonprofits, and that's what I've always heard is there's no controls in QuickBooks. But to be honest, I think accountants like that. It's just the accountants working with the firm or the business that's using it that has no controls. Then it's a bunch of cleanup work.
Like what Sam said, you have to be flexible in certain things, and you can have your preferred stuff, but if you try to have your way of doing everything, every client's different, and some client might be better on QuickBooks Online than on Xero. And you just have to figure out each client and how they work. That's the interesting thing about accounting, and the way every client's different. You can have two medical practices that you think were the same, but they're completely different and how they run things. So it's just, that's the fun part about our jobs, is everybody's different.
Yeah.
Most people want to do the same thing over and over again. They don't that's the hard part, is figuring out stuff. That's very hard to train people how to look, not just have the same processes and over and over again. You can have the underlying processes, but you have to be able to think. And most people don't want to do that.
Yeah, I'm just bringing it into conversation.
What's very interesting is you have this wealth management side, which a lot of CPA firms, I don't understand why a lot of CPA firms don't go to the wealth management side, because it's a very high profit margin, and it fits all your CPA clients. We're trying to sell them bookkeeping and stuff, which tend to be lower margin. The wealth management is very high margin and way easier to sell. So what would you say to a firm that's thinking about adding wealth management? How do they go about doing it? What's a good way? And is it worth it?
Yeah, I would say definitely be smart about it and try and find essentially a mentor or someone that's done it, before you, always to have, kind of the path forward, but just to make sure that you're not taking it lightly as well as, I mean, to become an RA, there's a lot of compliance. We have a lot of FINRA stuff we have to do. There's extra costs. You have to be FINRA bonded, pick a custodian. You got to, have the people to administer this kind of stuff. So there's probably more, I won't say headaches, but probably more hurdles than people would think. And, headcount you're going to have to add in order to make it work. But, essentially you made a great point, but like once you're done with the initial kind of upfront work, it's like building in passive, income into your practice. So once you have, that, $500,000 or $500 million of assets under management, you're passively billing, $500,000 a year at 1%. So I mean, $500 million, but it's just, make sure you have someone that's done it before you, if you can, make sure that you're taking into mind all the extra compliance and the people you're going to have to hire in order to administer this thing, because it's not just something that you just kind of forget about. You have to rebalance clients' portfolios. They're going to want to meet. You're going to have to, be able to explain asset allocations and performance and, your benchmarks and everything else. So it's getting a good partner. We use Dimensional too for funds, just making sure you got the right team in place and that you're understanding the incremental functions that come with it.
What was the name of the other one? Dimensional?
Dimensional Funds. So it's co-founded by the guy that's founded Booth School of Business in Chicago. They're very tax focused as well. You have tax managed ETFs and mutual funds, just broad-based, instruments for us to build our clients' portfolios with.
Do you use that as a reporting tool too?
We have a system called Advison, which is a CRM, just financial kind of toolkit. It has a rebalancing software in it. Like I said, it has our CRMs, our contact info. We can do basically our tasking and stuff in there. But that's just for the private wealth side. I use Canopy for our CRM for tax. But because we have Advison, we use Morningstar Direct in Office for like reporting and just like client reports and investment performance reports as well.
Well, it's like Canopy is almost like the Carbon.
Yeah, but we use Canopy. It's the same functionality as Carbon though. So that Canopy's for tax, and then Advison's for our private wealth. So we have completely separate CRMs for both functions because they are so different. We don't really want to muddy up the water, and I think Canopy just functions really well as a tax practice CRM. But that's also all of our client portal as well for tax. So all the CRMs, there's basic demographic information, client portal, there's e-signature functionality in there. We can even bill in there if we wanted to, but we use bill.com for accounts payable and accounts receivable management. So I do all the AR and invoicing through bill.com rather than Canopy.
What is that noise?
We got people doing some lawn work outside, but that's okay because we're talking about reach reporting right now.
We're not talking about lawn work then.
No. This is our reach reporting ad. You've never built a report like what Reach can offer because you've never had such an easy access to all your financial data before.
I feel like I already know how to use this product and I haven't started using it.
You want a product that you can use right away because if it takes a lot of time to do it, accountants don't have that time.
Well, we also don't want to learn new things. A lot of times we just want something to work right out the box because we spent our whole lives learning new things. We don't want to learn something new when it comes to reporting. We know what we want the report to look like, and now we just want it to be effortless. I think Reach does that.
You can build any metrics that you want. It's like using Excel, but with live accounting data.
Live accounting data.
God, accountants love that.
They do. They love Excel, joining live data, Excel-like functionality, and gorgeous presentation. It's like Word, Excel, PowerPoint all working together. Reach is the Microsoft suite of reporting. Sweet. I think that's pretty cool. The clients will absolutely love the reports that I will send them.
But it takes minutes to build and create. So basically, it's not going to take you that much time, and you're going to be able to give them fantastic reports.
So for our firm, at least, the success of our advisory services really relies on a strong relationship, and strong relationships start with communication. You can't just give them data without the visuals, right? They need the visuals. Clients get a deep understanding of their financial situation.
And reporting for clients is tough for a bunch of reasons. It is tough because every client's a little different. So you need a software that can help you standardize some processes and create beautiful reports. And that's what Reach does.
Yeah. Dashboards and reports that kind of tell a story, but turn your custom reports into templates you can automate. I love the customization for their reports too. You can customize your branding. They basically white label everything.
You like custom Jordans.
I do like custom Jordans.
And you like your custom reporting.
Custom Jordans and custom reporting. I can't fathom what they're going to do next.
So go to reachreporting.com and check them out.
Reach reporting, complex data made simple.
So when you went to work there, what was like the first things you changed?
Tech stack. I got a SafeSend, got us Canopy, I used Document for a little bit for CCH, but I didn't like it at all. So we ripped that out. And since Canopy has a client portal, we were able to save some money there. Financial statement preparation software, got Bill.com for APAR management, got Float for cash flow management. Changed a lot of tech. That prior accountant wasn't there whenever I started. So whenever I started August 3rd of last year, he was already out. So I had complete autonomy to, get the tech stack that I wanted and, just kind of made the stack price what I wanted it to be. And so far it's worked out pretty well.
So what was
created the tech stack, right? Like it's everything that you laid out.
Definitely overhauled it for sure. Yeah. So I definitely added, quite a bit of stuff.
So for someone who, because that's always hard, like figuring out where to start. So how'd you start? Like, how'd you learn about all these technology partners and which ones you wanted to use?
I mean, mainly just out of problems. To be honest, before we had SafeSend, I was sitting there processing returns through DocuSign and manually formatting emails every single client. If client had direct debits out of their checking account through tax return, that's a different email. If they're paying vouchers, that's a different email. We had clients that have 6, 7, 8 states, and I'm having to give them every single address for all those payment vouchers, all in DocuSign, to make sure that you're sending to the appropriate place, because I can't really rely on the client to go and read all of their individual state filing instructions and to get all of that. So it was just a huge amount of time to format these emails, taking 20, 30 minutes per client sometimes just to format an email and tell them their tax return was done. So we investigated something to help solve that, and saw SafeSend is being used by 60% of the top 300 firms, and that took our processing time from 30 minutes down to like 5 minutes per some client. So I've just really seen these points of friction in the process, and then just going out and trying to find a solution that mitigated that. And luckily, we're not afraid to invest, we're not afraid to change, and there wasn't really a lot of resistance from anyone in the firm to implement these things, even though they're not cheap solutions by any means.
So are you the only taxpayer, or do you have people working for you?
So we had a seasonal report, or seasonal support. We are looking for a assistant tax director position. So we're currently hiring right now, interviewing people.
So right now you're doing all the tax returns.
Yeah, we didn't even get her starting until I think March 27th, I think was her first day. So it was very hard to find any sort of tax talent. Still is out in Winston-Salem. So yeah, I was responsible for filing of about 230 something returns by myself.
So how do you prioritize those 230 returns?
And it was held together all through a freaking Google sheet this year. So, and that's why we got Canopy CRM to try and get things a little more automated, get things a little more organized. But had a giant tracking sheet that ripped out of CCH. So all the people that we filed the prior year, I was able to get a list of all that, rip them all out, put all the the information that I needed, where they are in the process, engagement letter, organizer sent, organizer received, scan in through CCH scan, to put it actually into the tax return. And then just, monitoring it all throughout the process. But
you were the change management in there. Like it's not about you were the change management. You were the change agent there, like as you came in, because that's the hardest thing for a lot of firms is like everything that you're saying in any business that starts to take on new service arms is the change management or to change anything. And you were the change agent. It's where you're at.
We definitely needed to grow, technology wise. My predecessor was having, a significant amount of extensions every year. The clients were unhappy about the pace of the returns getting completed. And, we needed to find something that made the client experience better. And, we're not afraid to invest money in making that happen. But yeah, it's just, we saw these, issues and friction, and we, found solutions in order to mitigate it.
So what's the next thing that you need to change?
Well, really deepening the bench. I mean, headcount's the number one thing. I say, ideally, where we are in our practice now, I would like to have 2 people probably in the tax department. So have somebody essentially functioning as like a tax manager. I've been hired essentially probably like a senior out of a Big 4 large regional firm, just to build in those layers of quality review. So I'm not the only person prepping and reviewing returns. I think that's probably the most dangerous point in our practice right now, is just that I am doing literally everything from pulling out the tax organizer to making sure that's getting milled off properly, to receiving documents, importing them in through CCH scan, and then reconciling the return, and just having not a second layer of review or, multiple layers of review. I get tired during tax season. Everybody makes mistakes. So this having those extra layers in there for quality, I think is really our next step in making us a, better tax practice. The technology, we're there. I mean, at this point, we've invested a ton of money. We have solutions kind of for every step of the way. I've learned CCH, pretty well at this point. I was mainly an ultra tax guy before. Yeah, so I think we just
Well,
need to.
you've always had a firm, or you've always done work on the side under a firm, and I feel like you still have a website for that. So do you still do that too?
Yeah. And so that's the cool thing about Timonier as well, is that we're incredibly entrepreneurial. Like our lawyer has a law firm on the side. I've got an accounting firm on the side. You can pretty much have clients that are really the best fit for Timonier. So we have $1 million, assets under management minimum, and, clients that want tax services done. We're not just going to bring someone in just to do a tax turn. We're going to find a client that is a holistic fit and, meets our asset minimum. So for me, just I have a firm on the side to take on those clients, and had it since 2017, and this is something I enjoy doing. I like having that entrepreneurial spirit and having a business on the side, and it helps you grow and managing this business, and my identity attached to Timonier as well. So I'll definitely keep it active.
So how do you manage the time with that?
It's difficult, especially during tax season, whenever I have free time. So unfortunately I've sacrificed a lot of weekends that get good clients returns done, and make sure the website's looking good, and I do my marketing campaigns, I do Google ads, and
website looks better than ours, I think. I was looking at it the other day.
Yeah, appreciate it. But yeah, I mean, I find the time to do it. I mean, I enjoy being a CPA. It's a big part of my life. I get a lot of self-actualization by having a business, and I made partner at Timonier back in February as well. So it's running two businesses and trying to make each one better, and that's something I enjoy doing. It's not a huge time drain on me from a personal standpoint. So I get a lot of enjoyment and actualization out of it.
So why not just go completely on your own?
Oh, well, I mean, it's at this point I'm a partner at Timonier, so I'm not gonna leave Timonier to go do this on the side. But I've wanted to get a few years of experience where I was really able to kind of go in and just run on my own. And I do think I wanted to keep it this kind of a single member practice no matter what. It's just something I've enjoyed having on the side. I haven't had the desire to jump the leap and scale it, on its own yet. And with Timonier and having, that position now, I don't think I'll ever will do that, on my own, but it is something I enjoy doing and having on the side. I mean, it's a good shell entity, but if we do want to do reviews or compilations through Timonier as well, we have to have public accounting firms own more than 50% by CPA, just for regulation's sake. So at least we do have that entity where we could pay me to do the assurance services, or pay McCraw PLC to do the assurance services, and we wouldn't need to go out and necessarily create a new legal entity or anything like that. We do the same thing for our law services. So Timonier is not a law office. So in order to have those legal services administrated, we bill out to our attorney's law firm for those services, just to make sure everything is in line with the North Carolina bar and the North Carolina bar and the State Board of Accountancy.
So as like a sole practitioner, kind of like yourself, how do you get your training? Like, part of being in a bigger firm is you have people like rely on, but you're kind of on your own. So how do you have that support network when you have a complex tax situation?
That's kind of a scary point about it too, is like I am at the end of the day, I have to, rely on my research skills, my own, determination as a tax professional to win.
You're pretty good at all that stuff, though. I think you're really good at that. So another firm may not be able to do that, but you can retain and find information pretty good for one person, I would think, just from my experience. But no, you answering this holistically. So.
Yeah.
Thanks for answering the question for him.
And I mean, that's really it. At the end of the day, I have to use the tools that we have. So I use AnswerConnect, which is our research tool. Essentially the equivalent of Checkpoint. Then you go into the regs, and I'd find multiple authorities to support my position. So I'll start at the code, go to the regs, and try to find a court case if I can. I build up that documentation package so that whenever at the end of the day, if I put something on the tax return, that I have a reasonable basis according to Circular 230. For my position on the tax returns. I look at the EntreCPA. I'm a part of the NATP, the National Society of Accountants. So, I go to them and look at their research or their white papers. Just use my resources. And at the end of the day, I don't put anything on the tax return unless I have researched and had a reasonable basis based on my experience or, the authorities for what I'm putting on there.
So what's something you miss about being at Scott's firm?
Probably the flexibility, to be honest. I think that was always a huge draw for everyone there. Is, Scott's, he's not a micromanager. He doesn't care how the work gets done or when you do it. He understands that everyone has a life and their own process for you getting things done. That work doesn't always come first. And so he was fine if I wanted to start my day at 10:30 and work till 7:30 or 8:30 at night or even later than that. There was never an issue for that. Like he realized everyone's a responsible professional. As long as you keep showing them that, and he was more than happy to grant you the flexibility to have a life and a job.
Thank you. Yeah. He thinks I'm an asshole because I want to introduce more systems and I want to get better out of people. I am very loose and I am very flexible, but I think we're going to start tracking time. And he hates
You already started tracking time. Don't say you're about to.
We did start tracking time.
I do it too. And I mean, we don't necessarily bill for it, but I mean, at the end of the day, if the client wants to come and, say we don't use anything for them, or like you want to be able to show a client, like, this is the trail, this is the bill hours that we spend on you. This is what it would probably cost another CPA firm. This is what ultimately you're getting billed. And who are your problem clients? Who are you spending a ton of time for? Where are those opportunities at? If you're not actually tracking the time and the tasks that you're doing, then when you're not really utilizing your CRM to its full potential, and two, at the end of the day, you don't really have anything to show the client as far as the work that you're doing other than just the end deliverable. But the client doesn't know the time that actually goes into that.
Thank you. That's probably what I've been trying to say this whole time. He still can't really buy into it.
Hold your staff accountable, and it shows what people are working on. If somebody's spending twice as amount of time on a partnership return versus someone of a similar level of experience, and either the entity is more complex, or maybe you want to have a conversation with them about, hey, you just not, refresher in partnership classes, is basis a problem for you or whatever. It shows you where opportunities are and maybe some weaknesses as well.
Also, the selling point for me is capacity planning.
So give us, before we go, because we've taken up too much of your time, got tax returns to do.
Yeah, really got a partnership return I got to knock out today.
Give our listeners some advice on, you've worked in all these different industries. Give them on advice if they're going to go out on their own. What's something that you've learned that you can pass to them?
To be patient and to not expect immediate results right away, and make yourself as good of a value proposition as you can. Go learn a bunch of technologies. Go learn Xero in and out. Go learn QBO in and out. Go learn Float and Bill.com, and these fintech solutions that are out there are only going to become more prevalent. So like making yourself an expert, making yourself more of a technical consultant rather than just the debits and credits accountant. It's going to make you very, very valuable. And just to be patient, enjoy the process. Understand that you're not going to wake up and have 100 clients immediately, and just learn as much as you can from each engagement, from each relationship, and really foster those relationships and manage them well, and stay in touch with your clients, and just become more of a partner rather than their accountant. And like I said, just learn as much as you can, and offer the services that you can competently provide.
That's beautiful. Sam, this has been amazing. Thanks for coming on the Sons of CPAs.
Thank you, Sam. This was great.